Traders, welcome to Trading Television, the exclusive, exciting new place for active day traders and swing traders. It's fast-paced, it's professional, and it's easy to use. From Wall Street to your bank account, there's never been an easier way to unlock today's top trading secrets. Let me introduce your host, Ken Calhoun.
Hi traders, and welcome to Trading Television. Here's yet another trading strategy I'm really excited to be sharing with you today. Here's a quick overview of exactly how it works.
Hello active traders, this is Ken Calhoun, president of DayTradingUniversity.com with our week ahead video for the week of September 27th through October 1st, 2010. Following up with last week's rally, in which our Friday session gapped up and ran strong into the close, I thought it would help you to take just a quick look at the chart of our longer term NASDAQ composite. You can see that 2380, the current resistance. It would not surprise me at all to see a weak or sell-off day or two at least coming up in the week ahead. So I will be cautiously adding to long positions if our market continues on up. It's certainly a strong technical pattern here, and buyers are fully in charge of the market, at least on Friday. However, as you all know from this past summer, our market has been very fickle. For days that we'll have up, we'll also have very harsh days down, and as we had just a few weeks ago, a multi-week sell-off that dropped it down over 200 points. So it's a great time to be trading, and the bias is definitely long, but with caution. So let's given that backdrop, let's take a look at some of the hottest charts for stocks, Forex, and our E-minis in the current market. First one up is Baidu. I really like this chart. This has a runaway strong move up this past week off the 88 resistance up to 98. I will likely be adding to a long position if this is able to clear the 100 resistance mark, say 100.5, 100.6. And again, these are not trading recommendations. It's just support and resistance areas that I will be looking at for my own trades. I will likely short this momentum day trading shorts on losses of previous day's high, but prefer to go long on breakout continuations. Let's take a look at a few other charts. Got quite a few to look at. Amazon has been absolutely amazing. Amazing Amazon. For those of you who've been trading this, you know that we came off the 120 consolidation area, roughly 120 to 130 back in August. We've ran up all the way to 160. Is this going to continue, or is it going to fade back into the range? Only the market knows right now, but I know that I will be initiating and adding to a long position if this is able to break up over, say, the 162.5 or so. I'm going to be skeptical right here and now. I will likely look for intraday shorts on loss of previous day's highs down here under the 155 if it starts to sell down. In the meantime, remember, we always like to stay clear of consolidation regions. And one of the things that I always like you to do is mark out not only the box ranges to identify the average trading ranges, the ATR, but also to help you identify key support and resistance levels so that it's really clear and really makes sense so that you can see how to trade these. Okay, let's take a look at LAMR advertising, a lower priced one that had a nice run up on Friday. It's on the radar for our week ahead simply because we are starting to break clear of the previous resistance here at 30.5. And again, what the market gives, the market takes back very quickly in this current market. So very good time to be intraday trading as well as swing trading. The Reen Sola from 8.5 up to 12. It's a good 50% run the last few weeks. We'll see if that's able to gain momentum and continue on up. If it doesn't, again, remember, just simply identify the box range, identify high volume breakouts either into the close or during the first hour or so of the morning open, and any day, here's a quick tip, any day in which the average trading range is at least 1.5, or in this case twice, a significant range breakout that exceeds the average trading range of the previous day, as SOL did. That tells you that the stock is not SOL, it's in good shape. And so anytime you see that kind of a ATR breakout trigger, something to look at. Let's pull up our ETFs real quick, and I will look at these primarily on the swing trading chart for you. As you know, gold's been doing really good. The commodity, the ETF, has also been doing nicely from 113 to 127. I will likely buy this on swing trading breakouts over, say, the 127.7 or so, and I may do intraday shorts on drops if it starts to turn tail and give some back. But so far it's been relatively strong, so it's definitely long bias. FAZ is one of my favorite plays for a potential bounce if it's able to break clear of this 14 resistance, right? So I will scale into a position over, say, 14 and a quarter, 14 and a half if it goes up. If it doesn't, then we'll leave it alone. Looking at our Qs, you can see that the Qs have been a success story as of late. What I want you to notice, though, is notice for how long this trend has lasted. Look for length of trends. That's one of the key strategies for us pattern day traders and for all of swing traders as well. The trends tend to reverse or pivot after they've gone the same length of days or similar number of days. So in this case, we went this many days, right? However many this is, 5, 10, 15, 20 days or so. We've done a 20-day uptrend. It's maybe due for a consolidation or pullback here. I will build a position in the Qs if it breaks the 50, say 50.7, 50.6 or so. But because we are at the time length interval that it's already moved in the past, I'm going to be conservative and expect that we're going to give some back here soon. So, and that goes to the broad market as well. Okay, let's take a look at our currency pairs right now, because we've got favorite pairs to look at right now in our current market are the euro dollar, because it's taking out 7-day cut pattern highs, and the ADX is well over 30, which is my trigger point, where the red ADX line breaks over 30, and we're taking out new 7-day highs. This one is good intraday short, selling under, say, the 1.3370.80, right? Looking for 40 to 60 pips on drops. Prefer to go in trend for swing trade continuations over the 1.355 or so. Okay, and the other of our pairs is our US dollar to the Japanese yen. Look for selling this under the 83.5. And personally, I would not be buying this pair unless it gets well clear of 86. I don't want to play around inside this range. I get burned if I try and guess at bounces. I prefer to go in direction for major breakdowns. So if this pair continues on down under the 84 with any velocity or strength, and particularly if and when the ADX red line gets over 30, at which point, you know, if this is selling down at 83.5 or so, I'll be looking to sell that pair. Okay. And last but not least, for all of our ES traders, here's a new strategy that I'll be giving you more details on at my upcoming Emini University. Look for these 3-day. I find that 3 days tend to provide good pattern strength breakouts and breakdowns for our E-minis. This is the ES, and you could see at the 114 support, 114.6 resistance, looking to trade outside of. As always, this will gap to some degree come Monday morning. This is the region within which to avoid trading. If the gap occurs, and here's a good quick tip, if you see these resistance areas, many traders will take stops if they try and sell and then it bounces, and the rest of it inside this range right here. So I will look for selling it first in here, and then in a subsequent day, if we get under that the 1116, under this point, under this support line, that would be a new trigger for new shorts. So this would be short area number 1. Short area number 2 would be down here right after it loses support. If we continue to get buyers, if this thing continues on up, which it may well, if we gap up to the 114.8 or so, one of the tips that I would encourage you to start thinking about is using our tabular, kind of like a tape reading for the E-mini, and that's another good strategy that I will cover in upcoming events. So anyways, that does it for this current week. Coming up, this is Ken Calhoun, daytradinguniversity.com. Remember to take a look at my other educational resources, all available through my main daytradinguniversity.com site, like momentumdoubler.com, chartscans.com, and many other ETFmastery.com, ADXmastery.com, and other trading programs and systems and services to help active traders get an edge in today's markets. That does it, and best wishes for success.
Introducing Momentum Doubler Training for Active Traders. I'm Ken Calhoun, founder of Day Trading University, and I'm proud to present my all-new Momentum Doubler training, which reveals specific step-by-step strategies for precision trade management.